Hello, Jay Fagan here with the Mattox Group and our second Summer 2025 OB3 update. OB3, of course, standing for the One Big Beautiful Bill, or House Resolution 1, which is the tax bill that has now extended the 2017 Tax Cuts and Jobs Act, effective 2025 and beyond, made a number of provisions from 2017 permanent, made several new provisions, and many of those retroactive to January 1st, 2025, and several provisions that are, of course, limited to tax years 25 through 28. That's December 31st of 2028. In this update, I want to talk about Social Security taxation and the new senior deduction. This is one of those limited year deductions. It's going to be from January 1, 2025 through December 31st, 2028. Depending, of course, on what future Congresses may choose to do as we move towards those tax years. But this deduction came about in response to campaign promises that were made, or campaign discussions. As you know, I always try to be objective whenever I talk about tax and government. But campaign discussions around making Social Security non-taxable for those who receive it. It's important to note that didn't actually happen. Contrary to what you may be hearing in the media and on the socials, Social Security is as taxable today as it was in 2024 and before July 4th of 2025 when the bill passed. Social Security income is still subject to the same rules of taxation. However, for some taxpayers, indeed for many taxpayers, the new 2025 OB3 senior deduction, again 2025 through 2028, 4 tax years, will make Social Security non-taxable for a number of taxpayers as a result of a calculation, the adjusted gross income calculation. So let me dive into real quick how Social Security is taxed. Since 1983, it's been taxed largely in this measure. There are 2 thresholds that are indexed each year. Currently, for 2025, it's $32,000 and $44,000 for married filers, and $25,000 and $34,000 for all other filers, except married filing separately. A number of provisions changed in the OB3 that penalize married couples filing separately. And Social Security taxation has been one that's been around that way for a number of years, and that if you were married filing separately, you had no threshold of non-taxable Social Security. OB3 does that for a number of these provisions. And the senior deduction is one of them. You have to file a joint return if you're married in order to claim the senior deduction. It is $6,000 per taxpayer. So for married joint returns, it's $12,000 that is eligible as an additional deduction against the income. So let's dive in real quick back on Social Security. Social Security is taxed based on these thresholds. And if your provisional income, you've probably heard about adjusted gross income. That's fairly standard. Total income less some what we call above the line deductions, and you get adjusted gross income. Well, Social Security has long had provisional income. And provisional income takes that AGI, or adjusted gross income, which is ordinarily your total income less some adjustments, takes that AGI and pulls the Social Security out of it, and it pulls tax-exempt interest out of your total income. Tax-exempt interest not taxed ordinarily, but for provisional income, we want to make sure it's not included at the top. So we take your total income, basically less Social Security and some other adjustments, and then we add back 1/2 of Social Security. So AGI less Social Security and tax-exempt interest, plus 50% of your Social Security benefits, and 100% of tax-exempt interest, generally municipal interest. And that gets our provisional income number. Very important number when you have Social Security benefits. We take that provisional income, and if it's below $25,000 or $32,000 if you're filing joint, none of your Social Security is taxed. If it's between $25,000 and $34,000, and $32,000 and $44,000 if you're married filing joint, up to 50% of your benefits can be taxed. If it's over those thresholds, 34 and 44,000 respectively, up to 85% of your Social Security benefits can be taxed. There's a couple of other tests. You have to take the lower of the 3 tests. Ultimately, that's kind of how it sorts out. And on average, most Americans whose Social Security is subject to income tax tend to have it taxed at the 85% of their benefit. Or 85% of their benefit tends to be taxed, not 85% tax rate. 85% of their benefit tends to be taxed if they are subject to Social Security taxation. So with the new senior deduction, the rules again around Social Security taxation didn't change, but the adjusted gross income did. So by reducing your adjusted gross income plus 1/2 of your Social Security and tax exempt interest, now that provisional income number may be lower and you may have less of your benefits subject to income tax. Further, by reducing your adjusted gross income by this new deduction, your overall income tax after the standard deduction or itemized deductions or other credits that you might be eligible for, investment credit, elderly tax credit, etc., then you might ultimately pay no income tax or significantly lower income tax, which as a percentage of your effective Social Security benefit may result in it being 0 or a very small number. So that's where it comes into play. It's not a change in Social Security taxation, but it may reduce the amount of your income subject to income tax, which could make that 0, reduce it all the way to 0. So how does the new senior deduction work? Well, we have $6,000 per taxpayer, $12,000 for joint filers. Again, must file a single head of household or married joint to claim the benefit. Also, you must have a Social Security or individual tax ID number, ITIN, on the return for all taxpayers eligible on the return to claim this deduction. That's also a big sticking point in the new OB3. A number of provisions now mandate a tax ID, a Social Security number, in order to be claimed. Now, if you've been electronically filing, you had to do that. You couldn't electronically file a return without a tax ID. But this is really, I think, legislative fix to push more and more people to electronic filing and eliminate paper filing altogether, which has been a stated goal of the Internal Revenue Service for some time. So must have a Social Security number, must file single head of household or joint, and your adjusted gross income, after we get through provisional income and all the adjustments and deductions, when we get to the actual adjusted gross income for single and head of household filers, it must be below $75,000 in order for you to get the full deduction. And for married joint filers, it must be below $150,000 in order to get the full $12,000 deduction. It phases out, that's not hard and fast, so it phases out at 6 cents on the dollar or 6% above those thresholds. So you would have a total elimination of the deduction if your adjusted gross income for single and head of household was $175,000 or more, and for married joint filers, $350,000 or more would have a complete phase out. That's the math on that is 6% of 12,000. You back that out, and that's how it works out. So now I will note on the married joint filers, there's a little bit of contention on that number. And if you're Googling it and or AI, there's a bit of contention the way the bill's written. We are going to look for some additional guidance. The $350,000 threshold is a math threshold. So at 6 cents on the dollar, that's what it works out to. But it does appear that there's some disagreement about whether or not it's a purely math equation for joint filers or whether it's a lower limit of $250,000. I'm going to go with the math until the government tells me otherwise. I always believe fall back on the math until you're told otherwise. So $75,000 and $150,000 full credit, $175,000, $350,000 the deduction, completely phased out under our current interpretation of the law. It's going to be claimed above the line. It's available for itemized filers and standard filers. And if you want to talk through your specific numbers and how this would affect your income taxes this year, should you be eligible, don't hesitate to reach out. We're happy to run through those, of course. If you're nearing Social Security and looking at when you may want to claim your benefits or what your benefits might look like. Have those conversations. We are registered Social Security analysts here at the Mattox Group. We can do a report based on your actual data and your Social Security earnings history and give you those options and understand how best to make a filing decision, when to make that filing decision, what to plan for, and in retirement, what sources of income that are available to you that you want to consider pulling from each year in order to minimize that Social Security taxation. So that's my update at the moment on the senior deduction and Social Security taxation. We'll have more to come in the coming weeks and months as we unfold the rest of OB3 and learn more about these provisions, and as we get more information from the Internal Revenue Service, which might be like pulling teeth, but we're going to get it as fast, as quick, as accurate as we can, and we're going to relay it to you. So again, thank you so much for paying attention, and as always, don't hesitate to reach out to me and the team. We're here to help. We always love chatting with our clients. Hope you have a great rest of your summer. Look forward to our next update and look forward to seeing you as the year progresses and we prepare for tax season 2025.